Okay, hi there guys. Just let me know if you can hear me and we'll get up and running, get the ball rolling. G'day Pete, how are you mate? I've only got a few in at the moment, but it looks at that'll build up soon. So, welcome to Trade Setup. Thanks for joining me. We've got, you can see on the screen there, we'll just go through the usual housekeeping. Top left-hand corner is our Twitter handle at trade_setup. Join us there, Facebook right, and subscribe to us at YouTube on the bottom right-hand corner. You'll see, I think it's at TradeSetup capital AU. If you search that, you'll see the icon when you find our channel there. So there's a bit of material in there. Also, we just give general advice. So anything I'm talking about now, anything I'll start banging on about, it's just my personal opinions on what I'm seeing and what I'm viewing. So no personal advice. All right, we'll get up and running. And feel free to, if you have any questions, if there's anything you want to discuss, privately or anything like that, just give us an email. Shoot us an email to support@tradesetup.com.au, and then I'll get back to you. Any charts that you have a bit concerned about or something like that. Anyway, just the offer's there. Just if you feel like it, take it up. Now I'll minimize that. So the topic for today, let me just remember what I put down. Perception versus reality, and cutting out the noise. Now, g'day, Lauren. This is something I think is hard. I mean, because I think it's human nature to want to know the answer and to want to, be right and, to work it out. Yet the markets don't work like that. They don't behave like that. The noise can sometimes be your worst enemy, because I mean, people just want to read things. They want to know. They'll read and believe all the hype, the different sources, but the reality is no one knows what's going to happen. But what you can see is what is happening. At any one stage, you don't know what's going to happen in the future, but all you can see, from charts, anything like that, is what's happening right now and what's happened in the past. And try to, if you can, all you're really trying to do is follow the market trend, whether it's up, down, or sideways, and then just try to deal with what information's coming, second by second, what's coming through. Not trying to guess where it's going and, listening to the analysts. One good example is CBA. That analyst recommendation when we took the long was to sell or hold. Now, everyone's got their own opinion, and I don't know how they trade. I don't know what they're looking at. But what I can see is that, to me, it looked like it was going to go up, and it's just kicked off hard. And I think they had a really good report, and it's trading. Well, it's backed off a bit today, which you would expect when it's powered along just up through $90. But that's just one of those things. If you start believing what you're not so much believing what you read, but putting too much weight into it and not what you're seeing and reacting to the here and now, it can cause a few problems. I mean, it's not. Sometimes it could be a problem like you miss out on a trade. Sometimes it could be cutting it when you shouldn't have cut it. Sometimes it could have been, g'day Vin. Sometimes it could have been, holding when you shouldn't have held, because it's quite clear what the market is telling you. Now, I know everyone knows that I like my charts, but there's definitely something to be said about using your charts for your timing, and adding to that is reading, doing your fundamentals for the trend and what could be the overall trend of something. So, for example, what stock we got here, A2M. Know nothing about the fundamentals, but if they're quite good and the market's looking like it's pulling back, and it's looking like it's yeah, no, I will, Lauren. That's a good idea, because we got one I think I did see something pop up from you on the chat, wasn't it, about WAF? Now I'm hanging in there. Okay, wait, take half rather than the third. Oh, that's just my own personal. That's just what I like to do, I guess. I mean, you can do anything. I mean, you can take thirds, you can take half, you can take quarters, you can take it in stages. I just like to take it at certain levels, and it makes me feel comfortable to take half. That's sort of what I've always done. In futures, I've always traded in a couple of contracts. If you're trading in 4 contracts, you might take 2 and 2. You might take quarters. It's personal preference. For me, I just found that the way I trade, I'm happy to take half off because generally it's at a good level. It's worked in the past. I mean, there's times when, they just keep on going, keeps going, 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 and then you sort of kick yourself for taking half. But it's a risk reward type of thing, and so far, so good. But if you take thirds, that's sort of, I guess that's up to you can take a third quite quick, then you can leave the second third for a bit of a stretched market, and then you just leave the last third open-ended. And if you like, that's what, I know Davin used to do that a lot on the futures, is quick. So if you jump in, say, 3 or 4 contracts, quick to take off a couple, and then ride through a pullback on the second, and then, if it does keep going in your favor and you're ridden through that pullback, then take another one off when there's a second pullback or something. And then seeing if you get that outlier trade on the last third. And sometimes, what I've found lately, they've gone a bit harder than what I thought, so I've taken half off. And then you're sort of looking at it going, it's really stretched on the second half, and I don't want to take that off because I want to leave it open. But your gut's saying that it's probably due for a pullback. And this comes back to just what I said about trading what you see, not what you think. I mean, if my gut's saying one thing, and I've already taken half off, I just got to ride it. I've got to put it below the most recent high or low, and hold it and let it play out. I mean, if I get stopped out, there's times when you're going to get stopped out, and it's going to give you the irrits. When you're following it up, and you can sit there and say, look, I should have taken it off there when I thought, my gut was telling me. But if you don't get it some sort of systematic approach, I can guarantee you there's times when it's going to, your gut's telling you one thing for whatever reason. I mean, your mindset can change day to day. So your gut could be telling you to get out, and the thing just keep, you get out, then it rockets up, and then you're going to be kicking yourself for not sticking to your plan. So you've got to pick one or the other. You've either got to stick to your plan of always taking it off when it's stretched, or always taking a third, or always taking a half, or always letting that second bit ride. When it's in a stretched market, you just got to let it play out. And then there's times I change slightly the way I will drag up my stop loss. There's one I just looked at a second ago. I don't know if anyone remembers this. SPT. I want to get back here. Now that went nuts. Am I on a weekly? I'm on a daily. So that just went, if you're in it, say, I think we got in about 90 or thereabouts, and it went up to $2. Now, when they just don't pull back, and you're not getting that high or low, and you know it's going near vertical, that's a harder call. I would like to have taken half off, when it touched on $2, and then the second half below this high low, and that just means maybe my average would have been about the same. I can't remember the first partial exit. I think the first partial exit was at 114 from 90 or thereabouts, and then the second was say 195 or 194, right up near those highs, which is great. So that was more of that, and that's probably one thing we shouldn't have, sticking to your plan. But when you get up towards 100% gain on something, I just think that it makes it very, very tough. And then probably that was when we did change the plan, did take it off and close it out when we'd already taken half off and not let it ride. In hindsight, it turned out to be the right thing. But I think when it was running up originally, just the way I was trying to raise that stop level had changed. So it wasn't below a higher low. You can see that really, the market had popped up, but it pulled back. You built a higher low here, in here. Then it started to go, consolidate sideways around the 90 mark, if you can see just in here. And then you had your higher low in there. Then you had another one just below this, potentially just below that one candle. It wasn't technically what I'd like to think of as a higher low, but You know, you got a green candle, red candle, that day was down and the next day popped up. So you could have raised your stop there. But from there, you've got pretty much from your stop of say below around $1, when it's at $1.50, it's 25% on the downside or 30% that you're potentially going to give up on the trade for having a very loose stop. But that's the way I would typically raise my stops. I mean, here it was probably a bit tougher because there wasn't much price action to work from. But the way I'm just trying to find, oh, here's one, 5GN. Let me just show you what I'm talking about here. Let's just go here, 5GN. That's the way I would typically raise my stop here would be, you know, it pops up, pull back. Okay, once it takes out the most recent high up here, then I'll put my stop under high low. So it gets up about here, even here, you know, it's taking out the stop. You could raise your stop below here. Then it takes out the next high into a new high, raise your stop below the most recent high low. And you just follow that trend up. You can see here, in here, you know, in here, and you're still, I don't know when you got stopped out. Here it was probably a bit tougher. You're riding through, and it is pretty obvious what's happening. It's starting to get a bit ahead of itself. It's starting to go bananas, going bonkers. If you're sitting on a really healthy gain, like we were on the SPT, I'm happy to raise it below the day's candle, the previous day's candle, but you still want to give you some sort of opportunity to be able to take any more upside if there is. You got to remember, if you're second guessing yourself a lot, and bears will do this time and time again. You know, you'll see bears always come out, say, "Oh, it's going to pull back, it's going to pull back, it's going to pull back," and then when it finally does, they say, "Yeah, look, I was right." And you can see people spruik that sort of stuff all the time on Twitter. And they post a Twitter note or something like that saying, "Yeah, I was right, I did pull back." Problem is, it could have rallied 50, 20, 30, 40, 100% from where they originally said. So if you're going to say that's the top here and then sell it, and then it keeps going up, I'd rather let it rise as much as possible, so I'm sort of dragging out as much gains as I can before I get stopped out, than try to second guess the top. Because second guess the top is it's all pure luck. Does that make sense? You're just trying to pick it, and if you're letting your mind change the way you trade, or you're letting your fears or whatever it may be determine how you trade, it's not a winning strategy. It's not going to, longer term, you're not going to survive, I don't think. Or you could best, you probably go sideways. So I think to really get the most out of your trading and do your best, it's really having your strategy in place and then just riding through it. I mean, try to turn off to the noise and try to, you know, for instance, I was just looking at recently, I was watching the news flow come through. This is on the coronavirus, and the media will love anything bad like that. And they can pretty much drive the fear in the market at times. The thing is that, you know, when it first started happening, the market started selling off. It's because of the coronavirus, and they had a couple of days, big sell-off. And it was a coronavirus, and the news is just pumping out. We've got this many more people, we've got this many more people. Then it turns, and the market starts rallying, yet the news kept going. They kept pushing, and all of a sudden the market is just turning the dime and started to rally. So it's really hard to know, you know, if you're sticking to what the news is coming out and you're letting yourself be biased a certain way and not watching the action for what it is, you could have been selling into that rally. You know, all your holdings, and all of a sudden we've gone into new all-time highs in the US. I think the Dow just went up. The DAX has just gone onto new all-time highs. We traded straight back up to where we fell off. I mean, look at the XJO. I think we got sold off. Oh, it's hard to see actually. This day here, you know, touched the new highs and boom, straight back down. That when we straight back up again, you know, 40, 50 points. On that day, and we backed away. So to me, that's just all pure technical. There was just a bit of a sell-off. You know, any reason to sell? We saw some news come through. The market started selling. The next couple of days, the same news was coming through. Yet the market was going up. So realistically, you're trading what you see. You don't listen to news. You can read it just to get a feel of what's happening. But if the market's saying one thing and the news is saying another, you trust the market. Don't trust the news. Same with fundamentals. If you're reading some fundamental on a stock and it's saying how, you know, for lack of a better word, how crappy it is, if the market's going up, who cares why it's going up? And, you know, don't try to say, well, it shouldn't go up because the fundamentals are saying something else. and it shouldn't go up. I'm not gonna get in. But how do I rephrase that better? So the market is never wrong. If it's going down, the market wants it to go down. If it's going up, there's a reason why it's going up. And who cares what that reason is if we're trading it? We're here to trade the market and pull money out of it. We're not here to be right or wrong. It's not a contest of who's the smartest. It's not a contest of um, who can get it right the most. It's basically a contest on who can make the most money. I guess that's the harshness of it. That's the way it is. And if you're not trading what you see, like I said, perception over reality. Reality is the market's going up. Your perception, or everyone might be saying it should be going down. I mean, if it's not, it's not. It's simple as that. And the market will tend to move in the path of the least resistance, meaning that if there's a lot of fuel built up on the short side, everyone's selling into it, and the news is all so bad, sooner or later you're going to run out of sellers, and the market's going to turn and squeeze them all back out. It doesn't matter what the news is saying. If they're saying the world's coming to an end and the market's going up, the market doesn't believe it. Does that make sense? I hope that's getting through a few points, but there's just been a few trades we've had lately, and they're going bananas, which is great. I'm not going to ever argue with that. CBA was one, I think, I don't know where I got it from, but like I said, they were saying a sell recommendation or hold on CBA, and look what it's done. It's gone from 85 to about $90, $5 really quickly. So we managed to book some gains. We're tightening up our stop on that one because realistically, how much further can it go, in a near vertical direction? I mean, I'm not going to question why. I'm not going to just sell it. I expect I'm probably going to be stopped out, but I'd rather be stopped out from a higher level than a lower level, if that makes sense. I'd rather, if I thought that green candle, for instance, this is just going back to what we were saying before, if I thought that was stretched there and I closed out at the end of day, I might have got 88, for instance. Now I might go, look, I'll hold it below the day's close just to let it go and see if the next day can kick on. Now I'm getting stopped out at 89. So I've got $1 extra under my belt just because I'm not trying to pick the top. I'm not trying to guess where the market's going. I'm just trading it for what it is. And I might have to give up a bit, but so be it. I don't know if I'm giving up. I'm not going to always pick the all-time highs. So I'm not going to pick the exact high of that. If it does turn from here, I'm not going to pick 91 was the high from Friday's close. I'd rather not pick the high, let it go, and get stopped out. So, like I said, if you thought through here, you close out that it's going to roll over. We've got this down day here. It looked like on that day there, on the 10th of Feb, it looked like it could potentially hold a lower high, roll over. You could have just taken yourself out. Said, oh, look, I've made from $2 to $4. I've made $2, and all of a sudden, bang, up she goes. So realistically, the market was saying one thing, it didn't stop you out, you gave it room to move, and you're right. I mean, it's kicked on. And the same when you tighten up your stop. You can just raise your stop below levels where, look, you give it a bit of room to move, and if it moves, so be it. Then you just keep raising until you finally it does turn, you get stopped out. Because eventually it will turn, but you never know how far it's going to go before it turns on you. And the same with the ASX, the same with the Dow. People have been calling the top on the Dow for months, absolute months. Every new thing that comes out, like the trade war, this, that, and coronavirus, that's the top of the Dow, bang. And then, lo and behold, gets soaked up we go again, straight into new all-time highs. And it's been doing that for months. So if you listen to all the news and sold on fear without seeing, looking at the market, trading it for what it is, then you could have been left on the sidelines. I mean, there would have been a few bears out there, quite a few bears out there think it's going to turn, I'm going to go to cash. People will talked about this a long time ago too. People going to cash. Market hasn't looked back. It keeps going higher. I mean, I do fully expect a turn and the market to get crucified sooner or later, but I'm not going to try to pick it. I'd rather let my stops work for me and see if this, if the ASX is up here when it turns, so be it. I mean, it's better than 6,900, but I'll keep raising my stops. And if the market turns from 74, so be it. And we can come crashing down from there, and we can get hammered back down to 7,000, a little bit lower than where we are now. So you just never know when and where things are going to happen. You're not trying to guess. You're just trying to trade what you see, and then try to squeeze out as much as you can. All right, that's a bit of a sermon there. Sorry about that, but I find these things really important and a good thing to talk about. I think I just read somewhere, and I sort of agree with it. People will spend, with your trading, and I've done it, and I still do it now probably, is 80% of your time working on your entries and your exits and things like that. And 20% of the time, maybe working on psychology of the market and reading things. Yet, and I'll probably agree, trading the market is probably 80% psychology, not 20%. So why are we spending so much time working on entries and exits when realistically we've all got so many different ways we enter and so many different ways we exit? No one thing is better than the other. So as long as you're consistently doing the same thing over and over again, it comes down to numbers and probability. And if you're doing that and you're getting results, you just stick to it and you tweak it as you go. And that's all trading is. I mean, if you can get 50-50 strike rate, even if you're 1-to-1 for now, and then you'll start taking your stats, you'll start seeing that, okay, that one just kicked on. Why did I get out of that one? It could have been that what we were just talking about, you were trying to pick the top. You picked the top, and you might have had a couple of losers. You just got your gain. You took the top off, and then it just off she goes. It just kept going, and that was the one where you could have got 3 or 4-to-1, which really improves your stats. So if you start taking notice of what you're doing and how you're reacting to the market, and then you start tweaking it to get those better results. I think mine on the alerts is only around 56%, right? Strike rate, but it's about 2-to-1. I'm happy with that. If that keeps going along the way it is, I know we can keep making money, and we'll keep ticking along nicely in the right direction. And then occasionally, if I can start to improve and lift that to 60%, 60% strike rate winners to losers, and stick it 2-to-1, great. If I can lift it, maybe I might have to drop to 55%, but I'm going 3-to-1. I mean, again, that's improving the overall output. So I think all these sorts of things, it comes down to psychology and why I'm closing out. I mean, there's so many that, just trying to think of a few recently that I didn't trade because my psychology got the best of me, yet it was exactly happened the way I thought. I mean, there's a bucket load of them. I mean, I can put out alert after alert, and there's a lot of them that will go on. I'm just not on board. Sorry about that, but it just comes down to, look, maybe letting the psychology enter the trading decision a little bit too much and go, and I'm probably by nature a little bit more of a risk adverse trader than an aggressive trader. So I would make sure most of my bases are covered on the risk side before I jump in. And there's so many that will kick off, which I thought, definitely it's going to go higher, but it's not, the entry's not right. I should wait for this. I should wait for that. Bang, up we go, 20% gain. I'm not on board. That's just the way it is. So for me, I know that. I'm happy to deal with that, and I'll just keep looking around for more trades. If I miss it, okay, back to the drawing board, find more. So for me, it might just mean that I'm not shooting at everything. Some people might just shoot at everything very more aggressive, and they're getting onto a lot more, but they're taking more stops, and they might be happy with that. That's fine. I just might have to do a bit more work in what I'm searching for and what I'm filtering for, and to find those trades and to find something that actually suits my personality and something I'm comfortable with taking and putting my risk into it. Does that make sense? So I think we all just we plug away at different things and we work on it and we just try to improve as we go. And I guess just remembering to take a bit of time to do some stats, just look at what you're doing, even take some charts, win, lose or draw, take a snapshot of the chart to see. And like I said before, I've said this many times, you just put some notes on there. Put some notes on there, make some notes what you're thinking, even if it was bad. Probably a lot of the times when it works out for you, you don't really need to take notes because it works out. But take notes for the ones that don't work out for you because they're probably what you're going to learn from the most. And really take something out of, because you can say, look, I went in there and I shouldn't have gone long. I mean, my risk was way too big. It didn't produce the high low. I went long and look, I paid for it. I got stopped out. Or you can even take something, you got stopped out, everything worked out. So just as long as you know that you did get stopped out, but you stuck to your plan, your mental game was right, they're actually a very good learning curve too. Because if you do everything right and you still get stopped out, that's just the way it happens. There's no way around it. But as long as you found your edge, you stick to it, you keep implementing your edge into the market, whether that's pure fundamentals and technicals, or pure technicals, whatever you do, as long as you're sticking to that and you implement it, you know it works for you, and it's just a matter of refining that. All right, is there anything you want to talk about before I just keep jabbering on about the same thing? Put some charts in. We've got anything, feel free to put in some charts you want to look at. I had a few that I was just going to look at. So at the moment, we've only got 5 positions. We've got CBA, which don't be surprised if we get stopped out of that sooner or later. If we can bounce back into the close today and it picks up again tomorrow, great. That will just kick on. We've got APT, which is a gainer, and that's actually looking really good to see that bouncing off the. Let me just look at the bigger chart, APT. So that was, you could view that up here. It was stretched. I was happy to tighten the stop up, because we've booked quite a bit at the moment. But I don't want to close it out. I didn't want to close it out on a couple of red candles because it really hasn't broken any key level for me to think there's going to be a decent pullback where I can probably take it off there, let it pull back, and potentially look for another re-entry. So it was just grinding sort of sideways to slightly lower. You can see the selling pressure is coming in, and just today it's broken back up again. So that's dragged in a few buys that are dragging a few bulls, squeeze out any of the shorts that are built up. So sometimes these setups, they don't break an anchor, and the anchor was really just below that low at 37.15 to this uptrend. And it was just a trend up really from this leg up, start of the year. The leg up from the start of the year, we hadn't broken that anchor. We hadn't really broken that leg just yet. We'd gone sideways, and this action here, the way it plays out is really just to confuse a few people. And there will be a lot of people to take it off that are not patient. They're going, look, that's the top. Look at it. We've had two red candles. The green. The next day couldn't get through the previous high. Then we got a negative day, a positive day, a negative day. Okay, that's it. We're going to roll over. They guessed the top, and all of a sudden this takes off to $45. We don't know, but that's what I mean before about perception versus reality. Not trying to guess where we're at, but just trying to watch it and say, look, if we get stopped out here, if we do get stopped, if it does turn from here, so be it. That's what happens. But we given it every chance to continue on, and at the moment it looks like it is going to continue on and go into new all-time highs. So that's Afterpay. I don't particularly like the business as such, and I don't know if it's really that stable or good. But I'm not going to argue with it. It's going up, and why do you want to argue with something just going up? Oh, I've done it again. Sorry, John. There you go. I'm always doing that. So if you can see, that's APT now. That's probably coming up a bit clearer. Yep, there you go. Yeah, so just what I was saying, you can see that today's action has taken out the previous few days' highs. Not so much volume in just yet. So, I'd be happy to have my stop below 38. I think we got it at 37, somewhere around there. But today it's looking pretty strong. 17 million's gone through. It's looking like it's going to trade through that high at 40.73 and trade to new all-time highs. So we'll see how that goes. We've got TPM, which was at one stage was looking like a bit of a basket case, and we had our stop pulling a bit higher than they had. I think the merger was going to go through. The High Court came out with the news. I think it was released on, obviously where it was released on a couple of days ago, the 13th, and that just gapped up, booked a profit. You're always going to, if it's going to gap up that hard in one session on news, you better for always to book a profit if you have, or at least tighten up your risk if you have already booked a profit, and you just got to remain in position on. But the reason why we got into that, it was more from the weekly that was going sideways for the good part of a year, and then just recently started to lift. You can see this little run up here. Once it got through these highs, you can say it's just holding higher lows all the way through. Then started to tick up, taking out a few highs. And if you thought, well, look, if we can take out a couple of these little highs, it could get a bit of a run on. Did jump in, didn't take out the highs. It took out the high, then backed off. And it was looking like, okay, we're going to potentially just roll over and do the same thing we've done before. Take out a high, roll over, we'll get stopped out. But instead, it's going quite nicely so far. What else we got? WAF kicking along nicely. I want to see if they can trade through and finish above 56 today. That would be great. It is. Look, that's stretched, and we're probably due to take a partial there around the 55, 56 mark if we can. So if you do book a partial, so be it. That's great. I'm just holding off for a minute because I can see that's day by day, it's doing a similar thing. It's not rocketing up, getting ahead of itself. It's not spiked like you generally do in a blow-off. In a blow-off, it spikes higher, it runs up. Say, look at this day. If you can look back on the 16th, this day in here, it finished quite strong. We haven't quite done that. We had a good day. It's been well contained. The next day's contained. It just gaps up on the open a bit, contained all the way up. So someone's soaking it up. they keep knocking it up, knocking it up, knocking it up, and great. So I'm happy just to give it a bit more room and see if it can break through and just see what happens if it gets through these highs, which are 56, I think, 56 and a half. So we've got to 56 today. So if we can trade through that, there could be a few stops. Longer term buyers are looking at the weekly going, look, I'm going to buy it on a break there for whatever reason, or it just triggers a whole lot more buyers because it's into new highs. And then just see what happens there. If that gets soaked up, if it runs into some selling pressure, then book some. So we'll see how we go into the end of the day. I think that's probably about it. What else we got? EVN, which we bought that going to the reporting. Before the report, it just looked to me like something good was going to come out. And like this, I know a lot of people say don't buy it into report. You never know what's going to happen. I'm a negative guy at best. I'm not a conspiracy theorist, but I always believe someone does know. And if this market's starting to hold a higher low, especially after this sell-off, starting to hold higher level and start to ramp up into a reporting, into a new report, then it's either short squeeze, any shorts that are built up getting squeezed out, it's popping, or somebody knows something and it's getting soaked up and there's, you can see the volume was starting to pick up as well. Gold was probably rallying, which was helping it come out with a good report, and then up we go, just continued on. So that's going nice. We haven't taken a partial on that either. Wouldn't mind just a few cents higher, then we'll probably book something on that, just for the sheer fact it's good to lock away gains when you can. Especially, to go back to what we were talking about before, Laurent, what I would always like to do is when it's getting stretched at my partial, if we're getting stretched like we are now, and you can see back here, the market was getting stretched, I'm basically using my stochastics as buying pressure and selling pressure. When it goes from oversold to overbought, that's your buying pressure pushing up. Now, if it starts to go up hard, that's great. It's weight of numbers on the buy side. It's starting to rally. Sellers are not pressuring it. They're not standing in the way. Buyers are lifting the offer, keep hitting it up. But if I can couple an overbought scenario with a resistance zone, like potentially at WAF, that's getting extended up here, and we've got this zone up here. I'm always happy to start booking some gains if I haven't taken a partial by then. If you're into new all-time highs and there's clear skies above, there's no resistance zone, then you can tend to leave it a bit more because they tend to get a run on a bit more, if that makes sense. They start to just go a bit harder. So sometimes if you're in clear skies, there's no resistance zone to worry about. Just let it go. You can let it go. And sometimes it's a bit harder when you're seeing a 10% gain sitting there. You naturally think, I don't want to give it up. I want to lock some in, and then all of a sudden it goes up another 10%. So that's WAF. That's the way I attack things. And then on the second part, it comes down to something like APT. You don't know if this is going to happen. So I'm happy to take a partial into a stretch market. I think we took something up around 37 to these previous highs. It went straight through. Didn't know that was going to happen. And that's the whole reason why we're taking a partial exit. If it does roll over, okay, we book some, we might get stopped out at break even on the second half. If not, we've got the second half that's going to keep playing in our favor. In a bullish market, like at the moment, we're in all-time highs in the ASX, the US, everyone's talking the pullback. If it's going to happen, it's probably going to happen hard and fast. So you're not going to get much of a chance to move, especially if the US is down 600, 700, well, not tonight because they're closed, but overnight, we've closed up on a high. All of a sudden, we know we're going to gap down on the open the next day. You can't do much about it. So times like this, I don't tend to let things run too much. I tend to tighten the stops up a bit, but if it's a bullish market where it's just been going up and it's nowhere near resistance, things are looking great, the talk is good, the news flow is all positive, everyone's a bull, then you can tend to let it run a bit more and not worry about your partial as much. At times like this, I'm always happy to start locking stuff. So I just don't know what's going to happen. If it does turn, like I said, hard and fast, then I'd rather have something booked and just get stopped out in the second half than give up all my gains because the market's just tipped over and fear's driving it lower. All right, let's get into what we've got there. CAJ, Capital Health. That is probably better looking at the weekly. Is starting to look okay. My biggest problem is that it's stretched just at this stage on the weekly, and we haven't come up into these highs. So if we go and draw that up, actually, let's just draw it up from the weekly. No, that's not what I wanted. I'm just going to my drawing tool. You took your partial, all right. Nice work, mate. Where'd you take it on WAF? Like saying WAF, sounds cool. Up at these highs, did you take it today or? Oh, let's get rid of that. Oh, that's too thick. All right, so we're high up here. Previous high just ran through only by a small margin before we had that sell-off. So what we've got, the spikes lower, they got soaked up here, then it went up. Only got through the highs. So about this stage, if it didn't, when you get that green candle finishing above the highs, and the next day or the next week it was in this stage, it was a down week, then I'd get a bit concerned of that. And then of course it's what it's had to do. The market just couldn't continue on higher in that one run. So maybe, okay, it has to pause, take a step back, clean out some buys, and then start again. And then potentially you can get to higher levels from here. So what it's done is pulled back. You can see basically from this run up, it's pulled back, had a good pullback on the weekly, consolidated above, was it 20 cents? And potentially looks like we're starting to run again. So if you're looking for, a target, if you're long, you could potentially from low to high there, and I don't, and you're sort of looking at maybe something up towards 45, or, give or take. You'd have to measure that. I can't actually measure that. Oh, what do we got there? Let me just see. Low of 10 up to say 32. What's that? 22 cents from about this low. 15, 37. So say 37 up towards 40, potentially. You can extend that out. If this is the second leg and it is starting to run, the problem that I see, it's just looking a bit extended for my liking. So remember the way you want to view it, the stochastics, for example, it's not sell when it's overbought and buy when it's oversold, that sort of thing. It's what is happening with price. If your stochastic's going from overbought to oversold, like it has, and it can't get up to the previous high last time, it just did. We probably just broke through it recently. Last time it was about here when it was overbought. It was probably around the 26 mark or so. Before that, we're higher here, matching off of these highs. The way, like I said, just stepping back again, the way I'm using stochastics is that if it's not kicking on with price and it's getting overbought, it means that there's sellers in the way. It's pure and simple. When things are euphoria, and we all know that, we've seen it just kick on and just spikes, it just means that there's no sellers in the way of the buyers, and the buyers are chasing it up. But if it's equal and opposite, there's a battle between the buyers and sellers still, you'll see that stochastic go from overbought to oversold as it's edging higher rather than getting a bit of a run on. So you'd want to see something like, this candle in here. This candle in here, when it's sort of that overbought, not overbought, but goes back into overbought territory in here, yet it spikes higher. It just means to me that there's no real sellers in the way. The sellers, if you're looking to sell it, you go, oh, let's just wait and see what happens. So they're all stepping back, or the majority are stepping back. And there's a bigger weight in buyers than there are in sellers. That's why you can, when it does go from overbought to oversold to overbought, you get this kind of thing. The market powers higher. So for me, what I'm saying is that now that we're getting sort of that overbought territory, and we didn't really get that far, than last time we overbought, I'd be a bit more conservative the way I'll be looking at this. I would prefer to have seen this up at 32. If we're up at 32 and we're overbought, then I'll probably be looking for that first pullback and seeing if I could, hit off the MAs, for example, on your weekly. And if you pull back on your weekly, you got this kind of thing, then I'll be just looking for that old trusty setup, something like that. Does that make sense? So for me, it is showing some good signs, but there still looks like there's some sellers that are happy to stand in the way and soak up sort of that buying pressure. So yeah, it'd be interesting to see how it goes. And the fact that, we had a good day on Friday and today's down only 1.8%, but it's down a little bit, then just bear that in mind. It could be a bit of, on the weekly, a bit of a flush of this high and then a pullback, and just see if it does pull back, see what happens when it does pull back. If it pulls back and holds a high low, okay, this might not be the time it starts running. It might be the next push up or the push up after. But as long as it's holding higher lows, Sooner or later, those sellers are going to start to step aside. But if they're not stepping aside yet, they might be starting to take charge and push this price lower. We don't know just yet. So it's a little bit early. Does that make sense? So John Waff. So that's probably it. Anything else you want to take a look at, guys? CAJ. EVN. That's kicking on. We talked about that TPM. So we talked about everything we've got at the moment. Let's get a couple. I just want to talk through. There might be a couple here that can just 5GN. You've got that too. I've actually got that. I didn't really. The funny thing is, a bit more of aggressive setup on 5GN. I think today is a good sign that it's going to start smacking into the bids, into the offers. So it's turned from what 97 or so up to 103. It's really somebody you can see on the depth on 5GN. I was watching the depth, so I bought it with this little pop through here, and it wasn't the setup that I would normally take. I bought it on that pop there on the 12th. Just through this, it was more of a continuation pattern. I thought, okay, if we get up, we're gonna drive through that. Instead, backed off, and the next day we backed off even more. So I didn't really want to put it out as an alert because I wasn't convinced. But even today, I'm not 100% convinced. But what I was watching is the market depth, and you can see the market depth. There was a seller in there. There was a seller pushing it down. So if you can only see the bid and the offer, 97, 97.5, for instance, you go, okay, it's backed off. Someone's coming in there. But the thing is, there was no one behind that for about 2 cents. So the next best offer might have been $1 or $1.01. Does that make sense? So we had a big gap. So it was like someone was knocking it down, knocking it down, knocking it down. So anytime it tried to pop, bang, they'd hit it back down again. Anytime it tried to pop, they'd hit it back down again. But the thing is, it wasn't a weight of numbers on the sell side because there was no other sellers really behind it. Everyone was starting to say, look, if it got to $1, I'm happy to leave my sell order there. So to me, that was saying that someone is trying to get set rather than the market's heading south. It's looking a bit more buoyant. Someone's trying to knock it down. They're probably trying to trigger some other sellers to push it down into their bid, into their buy orders. And they're just trying to build a position maybe, and it might take them some time. Maybe they've, this is all speculation, but it's just trying to read what's happening on the market depth. And today it looks like they just drive. There is no one out there, knocking into that bid again. And it looks like it's more of the reverse. Someone's starting to stack up, and you can see the bids. They just got a depth. You can see these bids are starting to stack up and starting to support. If they stack up and someone wants to buy it, they have to jump the queue and start hitting into the offer, or they have to go on the bid, on the current bid and risk that they don't get set. If that makes sense. So it's looking a lot more constructive today on 5GN. I think if we can sort of pop up and finish above that high, what's that high? 104.5. We can finish above there today and sort of rally into the close. I think it's going to be a really positive sign that we get some flow on tomorrow. And you can look at the volume too. Look at the volume today compared to a couple of days ago. So when it did break, good volume. The next couple of days it was easing volume, and then today the volume's picked up again. So to me, weighted numbers are pointing up rather than down. So don't mind 5GN, Laurent. Just wasn't alert. I mean, it's just because I don't like this sort of spike, and it comes back down, sits on that bid for a while, and starts to go again, pulls back, go. I mean, not my typical one, but it was more of an aggressive entry. So we'll see. We'll see how that one goes. BPT, not looking great, to be honest. That's wouldn't go near that on the buy side just yet. Look, the only thing going in its favour is oversold. Doesn't mean it can't keep going lower. The weekly is looking better, but it's way too early to tell for me. I mean, obviously that's heading higher, and a big flush lower to clean out some buys, and what that's done. Anyone that's bought it off this high low, off the MAs, bought it in this little pop up here. Let me just draw that up. Anyone that's bought it here, see if we can see that better on the daily. You can't really see it on the daily. Anyone that's bought it off, say 230, has just been squeezed out. If they haven't been stopped out, they're risk that this market's going to absolutely fail. Okay, does that make sense? So that's what they're facing. Anyone off this higher low, bought it here, they're still in gains, they're still in profit. Anyone that bought it here or, on that leg there is in gains. So all that pullback's done is washed out that first set. And so what we have to do now is just wait to see what happens from here. Are we going to continue higher like the weekly is suggesting, or are we going to start to get sold down now? That daily is well and truly on its knees, which would match up to a potential another high low on the weekly. And just remember, just because, this is the difference between price action and learning your individual double tops and your individual setups. It's good all knowing all that sort of stuff, but you've got to look at the price action and what could be happening. Sometimes if it ramps up and it's pulled back, built a higher low, and it can't get through this time, it may just have to pull back. And then on the daily, if you're watching the daily, you're going to get nervous. You take your stop, you take it out, you might take a loss, a small gain. But what you're doing is just creating that push lower into some bigger buy orders potentially that are looking at this weekly chart. So sometimes just because that's popped through and hasn't, closed above that high, which I don't know if it did. The high was 279. The close there is 277. So it didn't close above that high. It pushed through it that day on the 13th and finished below. The next day it's pushed up through it again. And you can see they were trying to kick it on and it just wouldn't. So eventually what would happen is if there's no buyers really to push it, then it probably needs to come back and search out some more liquidity, some more buyers who are sitting on the sidelines watching it, ready to buy. And maybe that's here. We don't know just yet, but we're looking at that zone there. So if you're long, on look at buy, I would be just watching that as a weekly zone and just drilling down to your daily to see if it can give you the entry. It's probably going to be a tough one because, don't forget the weekly, it's just pushed below the MAs. Last time it did that was back, the end of 2018, and just went straight up from there. So it's it's probably going to be a tough entry. But there's no reason why it can't pop up above the MAs. Your first pullback, see what it looks like on the daily, and you could potentially get an entry, like I think sort of in here. I think that was about the same time, wasn't it? Is that right? Yeah, in here, or even something like that, you can get an entry on the daily. You're just looking to buy when it's rising rather than. I know a lot of people do that. A lot of fund managers do that. Like, oh, it's oversold. We're starting to buy now. So I'm looking at it going, why are you buying? Who knows how far for, is it going to go down much further? Is it not going down much further? And I never believe that they're looking to be a buyer. I'm always suspect of why a big fund or someone will come out spruiking that they're a buyer and they haven't finished buying if they're going to try to buy $5 million worth of a rather illiquid stock. I'd be more inclined to think they're selling. They're trying to build up some buyers. So that's the skepticism in me, but I will always believe what I see. Well, I try to believe what I see and try to push aside anything that I'm hearing, I'm reading, because we don't know the motivation behind it. We don't know whether it's true or not. All those sorts of things got to run through your mind. But what is true is when someone trades, a buyer and a seller come together and they make a trade, that's a fact. That's the truth. And that will show up on a chart. And then we try to project out what could be happening, what's happening with the volume. It is a lift in volume here, which is great, but it hasn't, for me, has not provided an entry just yet. And it's well below the MAs on a daily. You might buy it here, it pops up to 230, you think you're a legend, and then bang, we capitulate down to 150. We don't know. And it just, all it's done is push down, pull back to the MAs. It's become a short, not a long. A short setup, not a long setup, and then we roll over. We've built a lower high, and then we extend further down. We don't know, but if it starts to hold up here and there's a bit of volume, and we start to pick up, and we start to hold some higher lows in here, especially a more constructive one. So I wouldn't mind seeing a bit of a bounce to 230, bit of a pullback, hold 220. See that volatility come out, as in it's not swinging and it contracts and then break to the upside and buy on the rise. So I hope that makes sense there, Jane. But yeah, I'd just be looking, being patient with that one at the moment. APX, that's another one that I've been watching too. John, I like that. It was a bit of a bummer that it popped up a couple of days ago, popped up through the highs. Popped up through the highs, what was it, on the 12th, and didn't kick on. Again, this was another one where I did buy. I didn't put out as an alert. I bought it 27.06, so I've been underwater the last couple of days, but nothing major in context of what's happening. The thing is, it's a little bit extended on the daily, so that's probably brought in some sellers along with what's been happening the last few days with the coronavirus. So I can understand why on your shorter term timeframes where there's some sellers that edged in, it's popped up, it didn't continue on the 12th, it sort of backed off into the close. Next couple of days is red. Thing is, it could be getting soaked up by a buyer, so that's fine with me. I'm happy to give that a bit more room because I think that the weekly is looking like it could extend more to me. It is getting a bit extended up at 80%, but there's no reason on the weekly that it can't spike up, and it's holding higher levels. You go back to the daily. This big move up here, big leg up over the period of what was about a year. We've contracted. So what we've done was found the base at 20 bucks, started to hold the high low at 22, and it's on the rise. We've pushed up into this previous high up here, backed off, held another high low at about 24. So for me, that's suggesting it's going higher. All right. So for me, that's a long. I do like that. It's not your traditional long, whereas I much prefer to buy off a key higher low when it's sort of in that it's coming off slightly on the oversold territory rather than in further up into overbought territory. So not big risk on this anyway, but it is starting to tick up. We'll just see if we can get back up through this high 27.64. I think that's going to continue on and at least test up towards 31, the previous highs. So tend to gravitate towards a key level. If it is going to go higher, if someone's starting to ramp it up a bit, then you would expect it to test up towards those highs. We'll keep an eye on that one too. So APX looking good. So that's probably about it. M7T, sorry, I missed that, didn't I? M7T. That there, cup and handle. I don't know if anyone knows that sort of cup and handle formation. That's your handle, your cup. To me, that's suggesting, Pete, you got that? Yep. Suggesting if you take that from low to high, this here, over the period of not a year, but 8, 9 months, so from about July last year till now, it's only got back up to these previous highs. To me, that's suggesting higher levels. So, if I was looking at this, which I am now, I'll draw it up. This is where I would probably have a bit of a read. I mean, I would every time. I'd read what they're doing. So the process for me, for instance, now that you put that up there, I look at that and go, look, that's looking great. Technically, looks great. Not flawless, but yeah, that's looking great. It's on the rise. We're potentially going to bounce here at 82.5. That's on your MAC, sorry, your moving averages. So your moving averages, your weighted numbers on the buy side. It's popped up. We pulled back enough on your stochastics where it's getting soaked up at a higher level. It's looking to run again. So technically, it's looking great. The next thing I do is just look at the volume. Okay, there's next to not a lot on the offer side, which is a good sign. If it starts stacking up on the bid, that's going to drag in some buyers, which will jump the queue and start hitting the offer on fear of missing out. All right, so that's the sort of next thing. It's got enough liquidity, especially if I'm going to push out an alert for people. You want to make sure that's got enough liquidity on the offer side that I'm confident that everyone can get set. They can get set at a fair price, and also just to make sure that it's not liquid on the sell side. There's nothing worse than buying it because of a great setup. I mean, that technically looked great, and all of a sudden you see the offers are stacked. Someone's stacking on the offers, so you know that if it's going to keep going up, and I'm going to buy it here, I want it to keep going up. There's a lot of volume to chew through, but there's nothing much on the buy side, which would mean that if I'm long and they can't chew through those sellers, then someone starts unloading and wanting to get out. That could just create havoc on the downside. So I want to be supported by some volume in the way of bids and relatively thin on the upside on the offers. So I know that if it starts, it's just a reverse of getting stopped out. If this thing's going to kick on, I'm happy to buy. I've got enough volume and the technical is looking great. Then, fear of missing out, people are going to chase it high and they're going to hit the offer. And that's what I want to see. And then it's just a matter of putting an offer in there a lot higher, take a partial and just watch the action play out. So that for me, not looking too bad, not a massive amount of volume, but probably more than enough. If you're looking at 21,000, 10, 15 grand, it's 54 grand just got hit. 83.5, is that right? Yep. So enough volume there, and then it's just really what I would do is just quickly look at the news flow, what's happening, anything good, good news coming out. You can see that basically you're looking for green. Business update, strong cash flow. Okay, that's good. So maybe without reading that, good cash flow, supported. They're not looking at capital raise, all that sort of stuff. Just go through what's happened in the past and what's triggered that sort of buyers to dive in. Quarterly update, which was on the 23rd of Jan, obviously taken well by the market, up 3.5% for the day or thereabouts, up 12%. What was that? A quotation of securities. So it looks like it's got some good news flow too. It's been fairly positive. So I'm happy with that. I don't need to go and drill down on everything that's happening in the way of fundamentals and read everything, because I can polarize my view, because you can start to read all this positive news and they're just leaving out the bad stuff, and you look great and you buy it and all of a sudden it caves in. That's the last thing I want to do. So I'm really just trying to get a bit of a feel for what's news flow. Is that enough that, any good fundamentalist would be happy to continue to buy and thinking it's, continue to go up? It's being supported by technicals and it's supported by volume. So, yep, I'll be happy to take a trade on that. So that's, long story short, that's the way I would analyze it. And this one here, just looks like it looks like it's ready to go. Continuous way higher. So that Peter looks good, mate. Looks good. What do they do? Healthcare. I mean, healthcare is doing well lately too. So it's sort of everything to me is looking ready on that one. It hasn't kicked on, like you can see, a couple of good days before we had, the next 2 weeks of contraction sideways. Let me just drill in on that. Or in here, a couple of good days, contract sideways, but held, basically consolidated the highs above the MA. Another couple of days, but still, even though it gapped down this day on the 28th of Jan, it was still bang on the MAs and it was still getting supported. So it was getting supported off the MAs. Okay, good extension higher, straight back to the MAs. So if we continue that theme, to me, it's suggesting that we're going to hold these MAs. We're going to bounce back up. So just look to see if the volume starts to come in, it starts to lift in volume off the MAs, then it's worth a buy, and see if it can blast through 95. It could even get a bit of a run on this time, because that move up there took out these all-time highs, or not all-time highs, but previous highs from July last year. So it looks good. EOS in an uptrend, sitting smack on the MAs, not looking too bad. You've had this for a while, haven't you, Lauren? Is that right? Or am I thinking of something else? EOF, I think I'm thinking of. This was one that got the better of me. I mentioned before, there's a lot that I've pushed out that have gone up as I thought, but I just didn't get in. Left standing on the altar. That was one around this zone. Yeah, I just don't know why. I just didn't get in. Didn't send out the alert. Didn't think anything was. I think it was a bit extended, and this is trading what you see rather than what you think. Look at that. Yeah, the market. Let me just draw it up for you. In here, you can see it was extended. It did have a red day, but then it consolidated. So I should have really recognized that, rather than put it on the back burner. Recognize that, okay, yeah, it was extended, but as it starts to, the sellers start to come in. It was only on a small part, only slightly they started coming in, but the stochastic was starting to head south. The price was going sideways. So even though the sellers coming in, they're getting soaked up. They're getting soaked up only over the period of a few days, but it was still happening. So it was a good bit of a heads up. We're consolidating. We're ready to consolidate on the MAs, and we're ready to punch higher. So I should have noticed that, and really, could have been an entry even on this day, on the 7th, blasting through these highs, of 760, I think 762, taking it. Yeah, it would have been on that day there, potentially 763 or 4. Could have taken an entry. The next day didn't do anything, but the day after, yeah, we closed on a high at 808, and then it never really looked back, and you got all the way through $9. So that would have been a cracker. Entry here, and this is the kind of structure I love. Seen that play up, push up, then sellers are coming in, but it's holding. It's holding the high, so it's holding that top third of the most recent move up. So anytime it holds the top third, and you can see sellers coming in, they're smacking it down. Look at it from overbought down to oversold here, and it didn't really go too far. Big rejection on the October, 16th of October. Next time they start to sell it down, it was getting soaked up again. all this move through here. Look at this heavy selling, potentially lower high, heavy selling off, 8th of November from an overbought scenario. So if you're looking at it then, you'd be going, all right, is this going to be a lower high? Are we going to lead to a break of that low? But instead, it comes down. It holds at a slightly higher level through 650, if you can see. I'll draw that up. So I reckon this is a cracker for technicals. So this is what I'm looking at. This level through here. As soon as that starts holding through there, after that push, and then, oversold, and we're starting to hold at a higher level, that's a good heads up. So for me, straight away, as we start chopping around here, I'll be structuring my trade, looking for a breakout there, and then an entry. Could have been an entry through, if you can see that, through this high with your stop below that, you could have been, and then you could have sat through the next few days of going sideways, but ultimately that was an entry, and you're basically going to be gunning for this high. First, see what happens. It just blasted through, then just leave it and try to raise your stop below the high lows. So it looks from here, as long as it can hold, it is extended up here, but there's no reason why it can't continue. Maybe that's about the same, extension. So potentially we're going to go to some corrective price action, meaning that the daily is extended. We need to be more corrective. So you're going to go sort of in that weekly pullback, which means a few lower highs in the daily. But in saying that, we've got, this here, the stochastics are getting sold down. It's holding up through 550. So if you're long, especially if you didn't, if you bought it in here, say you're just buying on that break there, for instance, through $1.02, I think. Am I right? No, sorry, $10.20. Yeah, $10.20 in here, give or take. If you're looking to buy through there, your stop's going to be below there, and you run the risk that it is extended, can't get through that high, and we go for a deeper correction, you get stopped out. But if you're long from in here, you're happy to give it some room. I would be happy to give it a bit of room, because it can easily just, take off and go straight through the previous highs. What's that, about 1075? So all we're trying to do, with any setup, with any price action, with any structure, is trying to read what's happened, the strength of a move up or down, and just see if we expect it to have some continuation. And what are we going to do? If we don't expect that, are we going to tighten it? Have we taken a partial? Okay, take a partial then. If not, and if we have taken a partial, what are we going to do with the second half? If it's looking really extended, for me, I always want to give it some time to kick on. Never cut it off its knees, because you just never know what's going to happen. Just because I've done all that technicals, I look like from that leg, from that low to that high, that's the leg up, and I extend it out. It's worked out perfectly. It doesn't mean I'm right. It doesn't mean it can't just blast off and go to 15 bucks easy. So I'm not willing to second guess, but that's just, for me, that's a risk factor. So I'm willing to tighten up a bit more if I start seeing these factors play out, because more often than not, we start getting a few sellers. They're going to push it lower. So you get a bit of profit taking, a bit of a correction. And if I'm sitting on a healthy gain, I'm happy to tighten up my risk. But if I'm on the flip side, I don't want to sell out just because I'm sitting on a healthy risk, because you never know how much further it's going to go. And this could be the one that goes to the moon. And if you were on it and you're not, you're going to be kicking yourself, like we have been with APT a long time ago. I just don't remember where. Somewhere in here, I think we took it off into that high. No, we took it off way back here. So silly mistakes. We bought it at 14. We got out below 20, and now it's at 40 bucks. So if we just held that, it would have been a lot easier. But that's the way it goes. All right, guys, probably call it a day there. I hope all that helped. And if there's something that's not making sense to you, feel free to send me an email, and I'll get back to you. Otherwise, I hope you enjoyed it. And we'll be back in on next week at 12:30. So we'll just see what this market does. Bounce back quite a bit. We're down 5.9. We're down 20 or so at one stage on the ASX. So it looks like retail's opened it, sold off, and pros might be lifting it into the close. But it's only 1:30 at the moment, so we've got a couple of hours left till we have to worry about the close. But we'll see if this market can be supported into the close. Anyway, guys, enjoy your day. Hang in there. Remember, don't believe everything you read. Just believe what you see. And try to improve those technicals. Even if you're a fundamentalist, if you can improve those technicals, it cannot hurt. It can only be another string to your bow. All right, enjoy your day. I'll speak to you next week. Bye.